Hey everyone, let's talk about something that's probably on everyone's mind. How much will $1 million be worth in 2050? If you're saving for retirement or building wealth, you might think hitting that 1 million mark means you're set for life. But here's the hard truth. Inflation is like a silent thief, slowly stealing the value of your money. By 2050, your 1 million could feel more like $500,000 or even less than that. Yep, you heard that right. Nearly half its value could disappear. So how do you protect your wealth and break free from the middle-class trap? These aren't your typical save more, spend less tips, these are game changers. Let's break it down. First, let's talk about inflation. In the US, inflation has averaged around 2 to 3% annually. If it stays at 2.5% over the next 25 years, the value of your money will drop significantly. For example, something that costs $100,000 today could cost over $200,000 in 2050. That's a scary thought, right? So, if you're aiming for 1 million by 2050, you're not really aiming for 1 million in today's dollars. You're aiming for what $1 million will feel like in the future, and trust me, it won't feel the same. Let's do the math. If inflation averages 2.5% annually, 1 million in 2050 will only be worth about $540,000 in today's dollars. That means your hard-earned money will lose nearly half its purchasing power. So, if you're saving for retirement or building wealth, you need to think beyond just hitting that $1 million mark. You need to think about how to preserve and grow your money to outpace inflation. So, how do you fight back? It all comes down to your investments. Let's look at 3 common investment options and how they stack up against inflation. First up, certificates of deposit or CDs. They're safe, but they're not exactly a powerhouse. With an average return of 3%, and inflation at 2.5%, your real return is just 0.5%. That's barely keeping your head above water with inflation. To hit 1 million in 25 years, you'd need to invest around $400,000 today. But remember that 1 million will only feel like $540,000 in today's dollars. Not ideal. Next, US Treasury bonds. They're low risk, but the returns are modest, around 3.5%. But after inflation, you're only looking at a 1% real return, which is still not enough to grow your wealth. To reach 1 million, you'd need to invest $350,000 today. Again, inflation eats away at your savings. Finally, retirement accounts like 401(k)s or IRA investments. These often invest in stocks and bonds with average returns of 6 to 7%. If you earn 6%, you'd need to invest about $180,000 today to hit 1 million in 25 years. But even then, after inflation, your $1 million will feel like a lot less. The bottom line? If you're relying solely on these traditional investments, you're not going to win the inflation game, and your $1 million won't go as far as you think. So, what's the solution? How do you make sure your money not only grows, but keeps its value? Here are 4 key investment strategies to protect your savings. 1. Focus on growth. Don't just play it safe. CDs and bonds are safe, but they won't outpace inflation. Consider growth-oriented investments such as stocks, mutual funds, or ETFs. Historically, these investments have delivered higher returns over the long term. However, they also come with higher risks, similar to the potential for high returns. Second, leverage tax-advantaged accounts. Max out your 401(k), IRA, or Roth IRA contributions. These accounts offer tax benefits and compound growth, helping your money grow faster. Third, rebalance your portfolio regularly. Make sure your investments align with your goals. Regularly adjust your investments to match your goals and risk tolerance. Diversifying your investments across stocks, bonds, and other assets can help balance risk and reward. And finally, plan for inflation. When setting financial goals, always account for inflation to ensure your targets remain realistic and achievable. Aim for returns that beat the inflation rate to preserve your purchasing power. Here's the takeaway. $1 million might sound like a lot today, but if you don't plan for inflation, it won't feel like much in 2050. The good news? The key to breaking free from the middle-class trap is to invest wisely, plan for inflation, and focus on growth. You've got the tools to fight back. By focusing on growth, diversifying your portfolio, and leveraging tax-advantaged accounts, you can protect your wealth and ensure your money works as hard as you do. Don't just save, strategize. Because in the end, it's not about how much money you have, it's about how much that money can actually do for you. Inflation is a fact of life. Like death and taxes, it's unavoidable. Basically, it means your money loses purchasing power over time. So, what's your plan to beat inflation? Let me know in the comments below. If you found this video helpful, hit that like button, subscribe, and share it with someone who needs to hear this. Let's build a future where our money works as hard as we do. Thanks for watching, and I'll see you in the next video.